Good morning and welcome to our webinar, and a special welcome and thank you to our presenter today, John Jeffries from Ulster Insurance Services. John has provided two handouts for today's webinar that you can download under the Handouts tab. One is a glossary of terms and one is a New York State Employee Handbook. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. A quick note about the New York SBDC. We are a network of 22 campus-based centers and satellite offices across New York State. We provide free business advising and free and low-cost business training in person and online to all New York State residents. Our services are made possible by the U.S. Small Business Administration, the state of New York, and our host campuses. If you have any questions during the webinar, please don't hesitate to type them in your chat box and we will answer them as they come in. And with that, I will turn controls over to you, John.
Okay, so this is called Introduction to Commercial Insurance Policies. So what's the purpose of the webinar? And if you were here last week for what we did on BOPS, the purpose really is the same here. The goal is to help you become a more educated buyer. It's help you to make better choices and create a better coverage versus cost balance. You don't want to pay for things that you have no risk of, and you don't want to underpay and then have something come up that is not going to be covered. So you just want to make as educated a choice as possible, and to give you some insight in so that when you're making changes, you can kind of put plans in place before you go through and apply to an insurance company. So my background is that I've been in the insurance industry for 11 years. I'm an employee of Ulster Savings Bank, which is wholly owns the brokerage I work for, which is Ulster Insurance Services. Ulster Insurance Services is an insurance broker, not an insurance company. So that just changes our perspective on things. We don't represent any one company. We represent several. And that does change kind of where I come from, verbally and the assumptions I make, just so you know where I'm coming from, because I think it's important that you know where the person that's speaking stands. Because when we bring in a client, we go and we shop out the coverages to many different companies. That is not how everyone works. So if somebody is with a captive company, which does the opposite, they work for the company, they may have a different perspective on some of the things I'm discussing today. So first thing is, what is insurance? And some of you on this call may also may have been here last week, but again, we're told over and over again, don't put all your eggs in one basket, diversify. But when it's a business, that's nearly impossible. If you're running several businesses, maybe. Insurance is paying somebody else to take a portion of that risk, to diversify that risk. You're taking a portion of your income and giving it to somebody else, so if something really bad happens, there is some recourse. You can't split the building in half and put it in two different areas. Very large businesses do this. We've seen this with some large companies that start to spread out across the country. But basically, transference of risk from one party to another is the definition of insurance. So what is commercial insurance? Commercial is general liability, property, auto. Commercial insurance is workers' compensation, disability, and professional liability. And we're not going to get too far into professional liability here, but that basically is your malpractice insurance. We think of that when a doctor makes a mistake and we sue them for that mistake. That's professional liability. We just call it malpractice when it's medical. You also find almost all professionals have this to some extent. An architect would have it. Just if they make a bad design choice and a building falls down, that's a professional liability that's going to step up for that. So we're going to go to the other areas with a little more depth. So what is general liability coverage? This is the coverage that covers you if you're sued for basically the basic things you do. Somebody slips and falls on your sidewalk, somebody comes into your office, trips on the rug. This is going to cover you if you're sued. It's going to cover you up to the liability limit, and this is why you want to try and have as high a liability limit as you can. On your policies, you'll see this is often expressed as like 1 million, 2 million, or 2 million, 4 million. The first number on that 1 million is going to be the amount for any one loss, any one claim that needs to be paid out. The second number is for the year. So if you had several claims in a year, that would be the max as the second number. So if you've ever looked at a policy and seen those two numbers, that's what that is. But the more important thing is that when you have general liability coverage, the insurance company hires the lawyers. So in the policy, this is called the duty to defend. So even if it's frivolous, if somebody's suing you and there's absolutely no merit whatsoever, the insurance company still must respond and still pay for that. I don't know if anybody on the call has been sued, but if you're sued, even if it's frivolous, you have to defend yourself. Even if they have no rights to the money that they think they do, you still have to go to court. And most of us are not trained in a way that would be able to defend ourselves in that area. And it could get extremely expensive just to mount a defense. This is an area where I think insurance becomes deceivingly valuable. People don't realize it's there, but it's one of those things that I think you're more likely to get falsely accused, I think, than to have a true lawsuit. But that is just an opinion. Property coverage. This protects the property. It protects the building, protects the company's property within the building. So the building itself, obviously, something happens to it. It burns down, lightning strike, starts a fire, there's bad wiring, whatever it is. That is going to be covered in your property coverage. You want to make sure that the building is properly covered and you do have the entire building covered. And if you don't, it's because you made a strategic choice not to. There are times when you may choose to say, no, I wouldn't rebuild this building as is, and I don't need that much coverage. But you want to strategically make those choices. You don't want to have a loss and then find out afterwards that you should have covered it for more. Business personal property is basically if you take the building, turn it upside down and shake it out, what falls? So this could be machinery, this could be servers, this could be just office supplies, it could be stock. So you want to be aware of the fact that the business personal property in many cases could actually end up being more valuable than the building itself. Just be aware of that. Again, you want to make good choices as to the coverage level. You just want to be cognizant of what you're covering. All right, commercial auto. Last week we went over hired and non-owned. Commercial auto is kind of the true commercial automobile policy. So this is going to protect the business against losses with business-owned vehicles or vehicles owned by employees used for business purposes. This is a true liability coverage. So it's actually a separate policy that is covering you up to a liability limit. You'll often see this as what's called a combined single limit. So you may find that you have $1 million in coverage, and this will cover for property and liability under one number. It's not just for tractor trailers and limousines and taxis and fleets and delivery trucks, things like that. If you send somebody out to just drop off a paper to or deliver a document to a client, that person's on company time. They get into an accident. Who they got into an accident with could end up suing the company if it becomes apparent that they were on company time doing it. If this is something that's very occasional, that you're sending somebody out for coffee, then it's not part of your main business, then hired and non-owned may be a nice rider to put onto like a BOP plan or something to add into your coverages. But that's for incidental. Something that might occur. You're going to a trade show and you need to hire a vehicle to go out to the trade show. It's incidental. It's not part of the heart of your business. If you're running deliveries and you have your company name on the side of a vehicle, commercial auto is what you need. So this is going to cover your liability and property damage should you hit somebody else. This is an area where comprehensive and collision may be selected if it's available. It depends on the type of vehicle. Some vehicles, this is not going to be available for, I believe, dump trucks. I don't believe they allow for physical damage coverage. So if something happened to the vehicle, it gets scuffed up, or you get some ugliness, the insurance company's not going to pay for it. I think they look at the nature of the equipment and say, no, that's something it just will occur. We can't protect ourselves against will occur. So incomprehensive is glass damage, things of that nature. Collision is you get into an accident and they help pay for repairs on your own vehicle. Now, this is also making sure you are satisfying the terms of your lease or loan. If you have a lease or a loan, make sure that the people that are writing your insurance are aware that you have terms that you need to meet. Just like when you're buying a car, they may say, if you're buying a car or you're getting a loan, you need to have comp and collision on it, or you need to have a certain amount of liability coverage. That's something that could be put in place on your commercial loans as well.
John, we had
One
a
area,
quick
yes.
question come in. Does it
Oh, okay.
cover taxis?
Well, commercial auto policy would certainly cover taxis, but you would pay more than for a person who's just delivering documents between offices. So yes, there's commercial auto is certainly something that you would want to cover taxis with. I would imagine you would absolutely have to. I can't imagine a scenario where you wouldn't. So one of the things that you want to do, depending on the nature of your business, if you're doing deliveries, anything like that, strategically select your drivers. The insurance companies are looking at MVRs. They're looking at whether people have had accidents in the past. They're looking at whether they have speeding tickets, refusal to adhere to traffic laws. All of those things do come in. DUIs become a big factor. I've found with companies that we represent that we will have delivery trucks and they have a hard time actually filling the positions because of driving records. So just be aware of that's part of the hiring process. If you're hiring drivers, make sure they're aware that they are only able to be hired if they can satisfy whatever criteria you've set for drivers on their MVRs. So that is something that we have run into with delivery companies. So workers' compensation. One thing I did include on this is the New York State Employers Handbook. This is from New York State. This is when you go to look up New York State on the website for workers' compensation. This is the handbook they put together. It's huge. So there's a lot of details here. We can't get into all of it, obviously. So if you have any questions in terms of rules or laws, that handbook is going to have the vast majority of them. And I'm going to give a little trick. If you download this book, and there's a way of searching through it for specifically what you're looking for. And I don't know if you've used this before, but once you open up the file, hit Control F. It's a function within many different programs, but this allows you to go through and find. If you Control F, type in what you're looking for, it will find it in the document. I've already used it on this particular document, so I do know that this particular document, it does work. So if you're looking for penalties, if you're looking for fines, you're looking for laws on contractors, Control F contractor will get you right to everything on contractor. It'll bring up every instance of that word. And that might make this 100-plus page document a little easier to get the information out. So workers' compensation pays for the health care and a portion of lost wages for an employee that's hurt at work. You may be required by law to have this coverage. And I say may because there are some people who are so small that they are not required. If you're the only person working for the company, it's not required. And you want to look at the rules in that book to make sure whether you do or do not need it. If you have over 3 employees, I believe it is automatically required. But there's a lot of different designations of who employees are. So you could have somebody who's a volunteer. You could have a church. Is the person clergy or not? There's things like that you want to go through and make sure of exactly what the status is and whether you do or do not need it. It's not a bad idea to have because if somebody gets hurt while they're helping or working with you, how are they going to get that covered? It just may be the right thing to have something in place, even if it's not legally required. But be aware. If you're required to have it and you don't, the fines on this can be crippling. I've seen multi-$1,000 fines come down. I'm sure there are much larger ones that are out there. I've seen things go through, and it's just because they let the policy lapse. They stop paying. I would imagine for many businesses, those kind of fines are irrecoverable. You need to shut down the business and go a different route. you don't want to cross these lines in a way that the Workers' Compensation Board comes after you with fines, because it's pretty enormous. Um, if those fines do occur, there's a possibility that you can have a phone call with them and they may be able to negotiate some of them, but it's better just to follow the rules in the first place. One thing I think is very important is to know the definition of an independent contractor, and it is in that book that is attached here under handouts. Many people have independent contractors working for them that they don't realize are in fact employees. If they're in fact employees and they're not covered by workers' comp and it gets found out, penalties can occur. Uh, if you think or you're unsure of those things, I would seek somebody who's an expert in possibly legal counsel or even a conversation with the Workers' Compensation Board to make sure that the people that you have working for you are independent contractors if you're calling them that. One of the rules of thumb that goes through my mind is that if you're directing how they work, they're probably an employee, not an independent contractor. If you hire somebody to do landscaping, you say, this is a contract, I want my lawn mowed once a week. That's probably an independent contractor. If you're out there telling them to go around this bush and I really want you to go next on that bush, or I really want the height to be this much and I really would like you to take the time and split it to be here between this time and this time during the day, you're not directing the person. They may become an employee unintentionally. Just be careful of those rules because if you find out after the fact that you should have had workers' compensation insurance, it could be a bad situation. One way to protect yourself on this is if you're signing up for contracts, make sure you ask for a certificate of insurance. Make sure the people that you are hiring have workers' compensation insurance. If their employer has insurance compensation insurance, then they are employees of somebody, and then there's a line between you two. So it's a more arm's length situation. You have something that's easier to define. If the Workers' Compensation Board comes, you can say, no, they're not employees of mine. They're employees of XYZ. So just be very careful of that.
John, to jump back
Yes.
a little bit with a quick question, we had one come in about multiple drivers on a policy for the last slide. And the question is if there's a formula that would allow you to calculate the cost for a small business for those additional drivers on the policy.
Yeah, well, you go to your broker or your insurance agent, and you tell them what you're thinking about, and then they would run the numbers. There's no universal formula because every company is going to look at it differently, and a driver with little experience at 22 is going to cost a different amount than a person who's 40 and has had a clear record for 20 years. So there's going to be a difference that is an equation that basically the insurance broker would go to the insurance company and say, this is what we got, this is the person that they're looking to bring on, and they may be able to come out with a number. Or they may say, this is not a driver that we can put on the plan. I've seen that as well. And every company is going to be different. Every company is going to look at it from a different underwriting perspective. So there's no set answer on that. That is going to be a case-by-case basis. On workers' compensation, just be aware there will be an audit. So at the beginning, when you're signing up for workers' compensation, you tell them what you believe your payroll to be. That's what your rate is based on. At the end, they're going to look at your payroll, and then you're going to pay for whatever the actual payroll was. There's exceptions to this are starting to occur. There's several companies now that are doing a pay-as-you-go scenario where you report every week what the payroll was, and then they charge you accordingly. So at the end of the year, there shouldn't be any surprises. Audits can go either way. You could end up having money come back, or you can have money going. You can have money going back out, and you just want to make the best guess as possible. You don't want to have a giant bill show up at the end of the year. But you also don't want to be paying money all year that you didn't have to. So, and this is easier for some businesses than others. This obviously some companies, they know exactly what their payroll is every year, and the audit will end up being less than $100 one way or the other. On the pay-as-you-go, that should line it up. So towards the end of the year, there really is no adjustment needed. It's going to, all of your workers' compensation is going to be based on your payroll. One strategy that is used is to properly divide people within the business. So, and I have here a pretty obvious difference. A person who works in an office is less likely to get hurt on the job than somebody who's up on a roof. A roofer, they could step on a nail, they could fall off the roof, they're lifting heavy items. Office workers, generally speaking, are going to get hurt less often. It's obviously not a guarantee, but the rate per thousand that they pay for workers' compensation insurance is going to be less if they're lower risk, and higher if they're higher risk. So you want to make sure that if you're, let's say, a roofing company and you have 4 people working in the office and you have 10 people up on roofs, that you have that divided, so you're only paying what you should. You don't want to be paying the extra amount for those office workers because you didn't divide the payroll. One thing that in reading the New York State Employers Handbook, intentional misclassification. So if you call all the people on the roof office workers and they're not, and it gets found out by the Workers' Compensation Board, you're talking huge penalties again. This is an area that the government does not take lightly. You want to be on the up and up here 100% because the fines are enormous. So this is another area where you want to make sure that you're using the classifications. When a person shops the insurance, which when I say shop insurance, that means they go out, they basically ask several companies to bid on it. They go through several different agents, or they go through a broker who goes to different companies. They're going to possibly say, nope, that office worker we feel is, they're going to have different designations. So there may be different designations of office workers, like an office worker who also goes out on sales. It's going to be looked at differently than an office worker who never leaves the office. So there may be different things that within the insurance companies. That's not what we're talking about, intentional misclassification. Those companies, if they are given proper information, will lead you down the right path. They don't want you getting fines either. But you want to have a good idea of classification. Make sure you're classifying to save as much money as possible and pay the proper amount. But don't intentionally mislead. A person who's on a roof is not an office worker. And that's a stark difference, but you want to, the cost of a roofer is quite high, and you could see companies actually stating things differently than they are in order to save a lot of money, but it will come back to bite you. The Workers' Compensation Board, again, takes this stuff very seriously. Disability insurance. Again, this can be required by law. This helps supplement income for those who are able to work. One other thing that was a big issue last year was the Paid Family Leave Act. This is how they implemented it. They attached it to the DBL policies. So your DBL policy is going to be a statutory amount if you're less than 50 employees. So it's divided by men and women, and there's a set cost. Every company has a different cost, but there's a set cost. The Paid Family Leave Act is a variable based on your income. So when an insurance company quotes you, you may find that the quotes look strange because you're like, well, that's not what the cost should be, and that's probably your Paid Family Leave Act numbers getting mixed in there. So this one, the rates are quite low, I think, compared to other insurances out there. But you may find some variables based on the amount of payroll as well. And that's for the Paid Family Leave Act. It's attached to the rate for disability insurance. Statutory DBL only pays $170 a week up to 26 weeks. Most people I would put in the category of that's not a sustainable amount. So I would strongly consider, depending on your business, enhancing this amount. Most companies, possibly all, have enhancements available on the statutory DBL. So that way you could double that amount, or you could triple that amount, or even more beyond that. The cost of this, generally speaking, as far as insurance goes, is less expensive than people would expect. I look at this as something that almost starts to become an employee benefit. It's required by law to have the 170 a week coverage, but there is the ability to upgrade it further and make it an employee benefit so that if somebody is in fact hurt, they're able to possibly continue to pay their bills, and they're not just in a perpetual falling behind scenario where I believe $170 a week would put somebody kind of behind the eight ball. And when I say this depends on your business plan, if you're a grocery store and everybody there is working 10 hours a week as a part-timer, upgrading on this is not going to make a huge difference because the people working 10 hours a week, this is not going to be something that they're going to see as valuable. But if you're running an office space filled with professionals, this could end up making a big difference to them because that 170 a week could be, like I said, crippling in terms of how little money is coming in. So just something to explore. And like I said, it's in terms of cost versus coverage, that's an area where there's a pretty good trade-off of upgrading. So breaking into the do's and don'ts. These are very similar to last week as well. But number one is be honest. Any misleading is going to come back to bite you with insurance companies. There's a lot of data that they're using. Inconsistencies will show up. The underwriters, that's all they do all day long is look at these numbers. So just be as honest as possible. Second, plan your numbers ahead of time. Kind of have your ducks in a row. Understand how old is the building? What are the updates? What do you believe your gross sales is going to be? These are all things they're going to ask when it comes to actually doing the underwriting. Have accurate details. So like I said, upgrades of the building, details in your lease. We've seen people go through, did the entire quote, and then found out that the lease was requiring things that we didn't know about, and at the last minute had to completely revise the quote that we put in front of them. And then payroll. Make sure you have a good idea of what your estimated payroll is. It can change throughout the year. It can, but we want to try and start on the best foot possible. And then make sure you give yourself enough time to shop for the insurance. The more time you have to shop, the less urgent the decisions, probably the better decisions you're going to make. And all they do is find somebody you can trust and communicate with well and maximize your coverage. There are times when upgrading your coverage is very inexpensive. Just be aware of that. Just cutting coverages is not always the best route to save some money, especially if there's a loss where you could have had it fully paid for and you only get it partially paid for. And also pay attention to your websites, Facebook, Street View, and advertisements. Underwriters, when an application comes in, it's the first thing they're doing now. It's going to the website, to Facebook and Street View. If you're not familiar with Street View, that's when you go onto Google Maps, you click on the street, and you turn the camera around to look at your storefront or your business location. That's what they're going to look at. Just be aware of that. If it's ugly, I don't know how you change it with Google, but we could take photos and send them at the same time because you want to create a narrative of your good, upstanding business that is addressing things. A picture from 5 years ago, if you have a picture updated where it's fully landscaped and windows are changed out and you've painted, they understand these photos are possibly old, but we want to anchor them to a good view and not have them look at that, then have to ask questions about it. It's going to change how they view the company overall. The don'ts are, don't over embellish what you do. Just stay within your main business plan. If things change throughout the year, if you're going after new business, you're going into in new directions, that's great. But we want to make sure that we're emphasizing the things that you do and focus on first. If we have to make a change mid-year, we'll make a change mid-year. But you don't want to pay extra all year long for a project that never actually gets off the ground. And it's something I've seen people, especially with photos on Facebook. Somebody who says, I do landscape, and then they have a picture of a person in a tree. Well, the insurance company goes, oh, you do tree work? They go, no. The insurance company starts to go, well, it seems like you kind of an inconsistency in your story. We don't want them thinking that, so don't over embellish what you do, especially even in photos or and watch the advertisements. It is a difficult balance. Don't try to tell the insurance agent or broker just the information you think they want to hear. You want to have a conversation, a thoughtful conversation where you can communicate exactly what your goals are so that you get the things that you need. You want to have the coverages that you need, not just because the information has been curtailed. And don't just sign up with, Uncle Bob out of family loyalty. Make sure you're dealing with a professional in the industry. Make sure you're dealing with somebody who knows your risk group, not somebody who's just in the family who does auto home once in a while, but somebody who's truly an expert. A nephew who got into the business a month ago, it's great that he's in the business, and over time he may become that expert. But you can't risk your business just for loyalty. There's so much at stake here that I would just make sure you're dealing with a professional. That is, in my mind, among the most important things. Tips: read your lease, raise your deductible if that's possible, and prudent. There's times when it is, there's times when it is not. And that's, again, you want to have that clear, open communication with the person you're dealing with, so that you know the cost benefits of doing that. Add enhancements and endorsements. A lot of times these end up becoming coverages you didn't think you were going to need, and then suddenly you need mid-year, and they tend to be very inexpensive to add on endorsement packages. Check your industry associations. Make sure that you explore that. Sometimes they have some great deals. What you don't want to do is just be overly loyal. Sometimes they're overpriced. So just check it. Make sure that it's not a great deal, because if it is, do it. And if it's not, make sure you're shopping to make sure that they're not overpriced and just really what's available in the open market anyways. I've seen it both ways. All right, what's not covered? Flood is not covered. Unless it specifically says, unless it's a flood policy, it's not covered. Watch your exclusions. As soon as you break it out of a BOP, which is kind of a package, you may have exclusions out there. A BOP tends to have a kind of all-encompassing. It covers a lot. It's a kind of a package. As soon as it's a commercial package or commercial insurance, it's not covered basically unless you want it to be. So you kind of have to watch very carefully on that. And then look at your quotes and make sure you're comfortable with what is covered. Okay, and then know who you're dealing with. Is it a captive agent? Is it a person who can only represent one company? They work for that company, they're beholden to them. Is it a broker, someone who does not work for a single company, or a person who deals with several different companies? Or is it a website? Just, there's nothing wrong with websites. Just be very careful, because it's an area where it's easy to select and deselect coverages without completely understanding what they are. Without being very educated, it would be hard to make 100% proper choices on a website. There's nothing wrong with it, and if you're savvy enough, I'm sure you can get great coverage there. I just would be very cautious with a person who's not specifically in the industry.
Do the underwriters review the commercial lease for usage, for example?
Um, I'm not saying they never look at the commercial lease, but I can't remember an instance where I've been asked for the commercial lease. Because the commercial, usage is going to be covered under the category when we're applying. We're telling them what the business is doing, kind of start to finish. And the underwriters aren't lawyers, so they're not going to go, well, you said you're doing X, Y, Z, and the lease says you're doing something else. That's kind of between the client and the leaseholder, or the lessor, in this case. So as long as the people or the business is doing what they said they were doing when it came to writing up the applications and getting the insurance, I don't think that the insurance company is going to care that much about the lease.
Well, we have an attendee looking for clarification on if they're part of the LLC, um, what they have to pay for workers' comp in relation to that if the employee is part of the LLC.
Well, if they're part of the LLC, it depends. I would definitely check with the handbook on this, because again, this is that area where you want to be 100% certain, and it may, even if you set up the LLC and there's a lawyer involved, it may even be something you want to talk to the lawyer about. If there's more than 3 people, certainly need to have that coverage. If you're an employee and working there, I would probably get the coverage. If the LLC is only 2 people, or if you are an LLC with 1 person, it's not going to be required, because it's just you working with the company and you're the owner. Actually, no. Let me retract that. I would have to look that up to be certain. Once it came out of my mouth, I realized that that may not be the case because the LLC is a separate entity that you're working for. So you may be an employee, not an owner by definition under workers' comp. That's something we'll have to look into further. That was, just retract that last bit there. Because it's an LLC, it's a separate entity. I would be cautious about not having the workers' comp. I would have to look that up to be certain. That's what happens when you start reading too much on the outside about LLCs and stuff like that. You start commingling the information. It may not always apply.
Okay. What is your opinion on driving a business vehicle for personal use now and then?
I would be cautious if it's your business vehicle and you're driving it. There's people certainly do it, but that means for personal reasons you're bringing your business's liability, into your personal use. So there's that division's not there. The insurance is going to be on the vehicle. So whoever's driving it, the insurance is going to be covering the vehicle. I would discourage as much as possible, but things happen. If the insurance company finds out that's being used for personal use, and like let's say there's children in the car, things like that, the insurance company may say no, this is not a risk that we want to write. And if there were an accident and it became clear that there were people in the car that weren't employees, the insurance company probably would cancel the policy, upon renewal. It's what I would say is likely in that case. Occasional, I don't think will be a problem because it's occasional, but and it's going to be covered. But every insurance company is going to kind of approach it differently, and whether they are how happy they are about that. When they write the policy, they're expecting business use.
One attendee is opening a bike rental and they're wondering if there's a discount if the employee insurance items on the employee insurance items when the store is closed or if they would still need property covered year round.
I'm not sure how this would affect the rate. Um, well, you would cover your property. So it's a bike rental. Is that what the question was?
Yes.
Okay, so if it's a bike rental, you're covering your property 24 hours a day, 7 days a week. The insurance company does not get to just cover it during business hours. So it's just going to be part of the whole rate. It's now the portion of when the bike shop is open, people walking inside, could they trip walking in the building, things like that. They'll look at your hours. They're going to assume that you're open 8 to 5 or between 8 and 8 or something like that. It's not going to be a huge factor in terms of when you're open or not open. That property coverage is covered. However, it's covered is going to be covered 24 hours a day, 7 days a week. There's no on or off. So if they're renting the bike overnight and it's damaged, is it something that would be covered? I would say what you really want to look at is, do you want a single bike covered to cover all those bikes separately? My guess is most of them are probably going to cost less than what your deductible is. So that's, I think, where your savings is to raise your deductible above where the cost of one damaged bike. If they're all stolen, that becomes a major insurance item. So I think you just want to strategically choose what you want coverage over and make sure that deductible fits properly. I'm trying to think where business hours become an issue is like restaurants. Restaurants that are open 24 hours are completely looked at differently by insurance companies. If you're only open for between breakfast and lunch, it's looked at differently. If you're open just for dinner, it's looked at differently. So some businesses, their open hours are a factor. But for a bike rental, I don't think that's going to be a huge factor. If I were to tell an insurance company they're open 24 hours a day, they might be concerned. But if I said I wouldn't even say that they're open. The assumption would be that they're open a part of the day, not the whole day.
A follow-up to that,
Hopefully that
John.
answered it.
A quick follow-up to that one. So it's a seasonal company, open May to Labor Day, and they are curious about employee coverage for workers' comp and items like that.
Well, in the off season, you don't have payroll, so you're only going to be paying for the payroll that exists. Then you would have a very short policy, and you would have to go through and cancel the policy after the season, unless you wanted to keep it in place for a couple people who kind of stayed on all year for advertising or working in the off season, repairs, things like that. But yeah, almost all these insurance policies are annual, and insurance companies will be apprehensive about trying to write a seasonal business because they feel like, well, we're going to charge them an annual rate, and then they're only going to pay a quarter of that annual rate. So that's one where we would have to be pretty upfront with the insurance companies to find something that fits. And because it's seasonal, you may pay a higher rate than somebody who's open all year, but may still be less than somebody who pays for a whole year. I'm hoping the way I said that makes sense. Yeah, I would definitely report zero payroll. When there's zero payroll, I would not pay for workers' compensation if there's no risk. Um, but I would also sign up probably for an annual policy. But there's going to be some suspicion that you're going to cancel at the end of the season because people do that, and insurance companies are aware of it. The insurance companies and the underwriters are very smart people. It's and that's why it's better to be upfront with them because they do know they do have a significant amount of experience. They've consolidated a lot over a significant amount of time. So I would probably keep the coverage in place because wherever you're storing the bikes, where in tools and all the servicing equipment and things like that, that risk does go throughout the year, even though the liability far reduces when you're not renting.
Yeah, they're saying they can't cancel because they still need the building and inventory covered year round.
Yep, that's exactly where my head was at. But if you're, I was wondering if it was like a pop-up where you just go and push everything into a storage unit in the off season. I could see somebody being flexible that way. That doesn't mean you are flexible that way. Yeah, maintaining the storefront is not a bad thing either.
Thank you. This one is coming from a wedding and event planner. They're wondering if you think they still need disability insurance and what other types of insurance they need to consider.
If there's employees that, if you're doing enough events that you have employees that you're using on a daily basis or once a week, twice a week, I would definitely do the DBL. You have to have it. The likelihood of somebody using it is probably less because I would imagine with events and weddings, you're not working 8 to 5s every day. You have periods of tremendous activity, and then just yourself when there's no activity, or you and a very close group of people that are working for the business. So I would definitely get it. Again, it's something. DBL is significantly less expensive than most other coverages. So you may find it's $27 a year for a person, and then you rotate throughout the year, you may find that you only have 10 employees that need to be covered throughout the year. So I would get the coverage, but my guess is it's not going to be overly expensive item. But the workers' comp, that's going to be based on just the payroll. So I would have it in place and then make sure that you're logging all that payroll properly, because anybody who's working for you at that wedding event is going to be under your direction. It's definitely going to be an employee, unless you're always hiring a caterer, and then I would make sure they have that workers' comp.
We did have another question come in. At the bike rental, there will be an Airbnb year round. Is the housekeeper covered?
Airbnb is a sticky area in insurance still.
Yeah,
A
they had
housekeeper,
a follow-up
yeah,
too, covered under my property insurance. I can't find many cleaning people cover their own insurance.
yeah. I would say what you want to do there is look in the New York State Employers Handbook, find what the definition of independent contractor is, and make sure you don't cross any of the lines so that they are a true independent contractor. I want you to clean. This is what the definition of clean is, and you get to do it. If it takes you an hour, it takes you an hour. If it takes you a half hour, it takes you a half hour. But this is what clean is, and be very defined. Um, and you don't want to be there and be like, I want this, this, and this, and kind of direct them and say, I need you there between the hours of X, Y, Z. Obviously, after a stay, you do have some ability to tell them times, but I wouldn't say I need you between 8 and 8:30, and you'll get paid. If you're giving them dollars per hour, um, you're crossing that line into employees. I would make sure as clear as you possibly can that to make sure that the person is a contractor. There's not going to be workers' comp coverage under a property policy. If you had a homeowner's policy, there could be incidental workers' compensation, but this sounds like it's a commercial building with commercial coverage. That's not incidental. They expect people that are commercial to have a separate coverage or something like that.
The rental. I was thinking if she falls down the stairs, if the fall would fall under liability.
Oh, if she's there for the purposes of doing work. That's a tough one. I'm not entirely certain. If she was visiting you, yes, no doubt. But she's there to do work. I would say still strictly adhere to those independent contractor terms. Make sure that you're not doing anything that crosses a line into making her your employee. And if, let's say, it's a person who also works for the bicycle business, even more so that might intermingle in terms of risk. So I would almost try and go to somebody larger that does have workers' compensation insurance. That you're in a very narrow area where it starts to get into interpreting law, and I'm not a lawyer, so I'd be very, very cautious in that situation. So if it's somebody who's just visiting you, somebody who's there for the Airbnb who falls on the stairs, yes, assuming you have coverage on the Airbnb portion of the building. But I would be very, very cautious with the independent contractor definitions. Anybody wants to reach out and has further follow-up questions, didn't want to ask on the call here, feel free to reach out. I'd be happy to walk you through whatever there is. And thank you all for listening.